You're listening to RIAcast, a podcast of the Southwest Florida Real Estate Investment Association. RIAcast brings together a variety of real estate entrepreneurs from all over the world to share tips and ideas. The core purpose of the Southwest Florida RIA is to help members become more profitable and successful through networking, education, and empowerment. Here are your hosts, Jeff Tamarello and Michael Lyons.
This is Jeff Tamburello. I am one of the directors of the Southwest Florida RIA, joined by the other director of the Southwest Florida RIA, Michael Lyons, MBA.
MBA. Yeah, let's
Yeah,
not mention that again.
You had to look like it's that Adam Sandler movie where he goes back to college when you were in college.
Yeah.
You were a couple days older than the other students.
That's right. That's great. How it goes, man?
Paid money to have been in some of them classrooms.
That would have been a lot of fun.
I keep saying I want to go back and finish my degree just to go. I think it'd be hilarious.
You in a college classroom would be. I would go to the class. I'd pay to go to the class just to be part of that experience. That would be pretty awesome.
And I mean, actually, me and Dana. College class.
Can you imagine watching Dana with a bunch of college students and how that would be? Yeah, they'd probably injure him, or at least attempt to. It would be that'd be fun.
Well, I also think his brand of advice would make this current younger generation suicidal.
Yeah, it would be bad. Yeah, they'd go, we've done everything wrong, man.
So we're going to talk about, I've got the September foreclosure report, but I'm starting to see some positive news in the stats. And ironically, the social media takes, and particularly some of the media takes, are kind of burning the brightest as far as on the negative side, which is usually that's one of your when you start checking boxes. My favorite was in '09. The news press ran an article that there was 20 years worth of low-rise condo inventory. And ironically, I think 4 months later, 5 months later, there was 9 months.
Yeah, so a lot of property sold in those few weeks.
But the prices hit a point, and then they put a spotlight on a cheap asset, and all of a sudden, like, why wouldn't we own one of them? I have a family member that I bring this up to him, every chance I get, that he wanted to invest in here, and I brought him 4 South Fort Myers condos at $100,000, and he wouldn't do it. Didn't think they'd go up in value.
He'd have made a killing had he done that.
Well, they're in threes now.
Oh yeah, well, recently there was that article that went out, nationally about Cape Coral being the worst real estate market or whatever. It's something about how bad Cape Coral was, and I was like, good. That just gives us more exposure to people running in and buying property.
Because there's some great data sources out there, like Resi Club just launched a new pricing platform, and I was playing around in it, and they're running that ad, and there's markets in this country that are down twice as much as us. But I mean, do you think they're going to sell a lot of internet subscriptions because Stewart County, Georgia, is down 14%? I mean, that's right where my hunting camp is. That's Fort Benning. And think about an opportunity as a military base there.
Yeah. You got constant people coming in now. Yeah.
But I was laughing. I'm like, the Wall Street Journal somehow never ran an article on Stewart County, Georgia.
Yep.
Which there's 9,000 people that live in that county. So
what's the downside on the whole media? And and I'm sure there's some pretty good media out there, but just generally speaking, it's not good. I had Bloomberg called me yesterday, day before yesterday.
Yeah, I talked to the same guy.
Did you? Yeah, and again, it was. I mean, I talked to him, but I said to him, I said, my concern about having a conversation with you is you're going to pick and choose what you want for your story. And if that's going to be the case, we could just end this conversation now. And no, of course, no, of course not. But, you just never know. You can't control what they're going to ultimately do. But reality of what's taking place is the talking to people who are on the ground doing the business and not dreaming about the business. I mean, if you're in the trenches, you know what's going on, but you hear all the hype online.
That Cape Coral is the worst market. The realtor that they quoted in that has like zero production.
Yeah,
he's trying to be a realtor. One thing if, say, you're an investor with a real estate license, you know what I mean? I'm not expecting that guy to do 50 million a year in production or something, 20, but if you're out there trying to be a real estate agent as your full-time gig and you've done like 10 transactions in a year, probably not the guy that should be quoted. Do you
It's kind of
really?
like asking me if I want to be a doctor, but if you get me ask for some medical advice, I promise you it's going to be bad. I mean,
Yeah.
there's nothing good coming out of that,
I
man.
mean, I'm sure I could YouTube brain surgery.
That's right. Chat GTP it, yeah,
Yeah.
yeah. That's-
Hold on, I gotta ask ChatGTP which one of these I should cut.
Which do I cut out? Yeah, we know what our next career will be when this is all done, right? That's funny. Oh, good. Well, you got stats as we're gonna go over some foreclosure stats, or what stats we got
Yeah,
today?
this is I did the foreclosure report. Thought it'd be fun to have somebody besides me talking about it.
I'm
So
on, man. I got it. Yeah,
I could just figure out where I put the share button.
gotcha. I think it's green.
Yeah, it is. You found it. Congratulations, Mike.
We are we are tech savvy on this.
Can you see it?
Yeah, yeah, you're
All
good.
right.
Yeah,
So here we go.
let's check it out.
All right. Always got to have the disclosure, my work done for me, shared with you. My favorite thing in uncertain times, it's easy to overreact, but let's stay grounded and focus on the numbers. I have talked to some crazy people lately in
Yeah.
both directions. Realtor got 3 closings, suddenly everything's perfect.
Oh, yeah.
I was like, you should go buy a new boat, finance it.
No money down. Yeah, there.
Yeah,
Yeah.
I'm sure that 40-foot yacht's been still sitting on the lot, a little cheaper today.
Yep.
One thing why we watch this foreclosures drive negative price pressure. And again, what's driving your next investment or life decision? How about you, Mike? What's driving your next investment or life decision?
Well, numbers. And I know when it comes to if foreclosures were to increase drastically, which as sick as this sounds, that would be awesome. Not for the people going through the foreclosure, but from an investor standpoint. But going back to your initial, what drives what I do, and from an investment standpoint, even from a business standpoint, is numbers. You get involved in the emotional aspect of what's going on in the market. You can either talk yourself into a bad idea or talk yourself out of a good idea by just being emotion based instead of the numbers on it. And I don't know. I've been extremely aggressive over the last several months now, as everyone else is kind of running for the hills. My thought is, well, there's blood in the water. The sharks come. You gotta. I mean, I don't consider myself a shark, but I'm going to be very aggressive on trying to acquire assets at a price that I know worst case scenario my costs are covered and I'm good. I mean, that's pretty
Well, I
safe.
was doing some data work on a mobile home subdivision we all know well. I was
Yeah.
kind of proud of you, man. You're the number one in there now, although they're all titled in your personal name.
That's all being changed. Yeah. So we don't have to share that now, but yeah, that's
Well,
all
I thought
being
I raised
prosecuted.
him better than that when I.
Yeah, no, I had a dear friend of ours, actually attorney, that's going to handle that all. He had something he went through, but that put him back on getting that portion done to change it
I
out of my.
hear you.
But yeah, I'm getting that all squared away. But yeah, no, I've been real aggressive and when times are rough, you just use numbers to make educated decisions on stuff, and then you take a chance. And a side note too, invest what you're okay with losing. And maybe being okay with it losing is a dumb thing to say, but are you still able to get up and handle your bills in your life if you were to lose all this? And I can say yes. So I've taken some risks, and it's so far worked out really well. So
Yeah.
we'll see. You know,
It's funny. Wes was he's trying to acquire in there too. I'm like, just offer Mike 5,000 more than what he paid.
yeah, that's right. Or 50,000 above I paid. Otherwise, it ain't going nowhere, man.
So and then 2025 brings a lot of new dynamics. This is a
Yeah.
pretty interesting market that we're in, and everybody's trying to correlate it to markets gone past, and the every cycle is different in intensity and duration. So if you try and think there's going to be a repeat, you're going to get smoked.
Yep.
We always start with this chart. This is list pendants called the mortgage foreclosures. We manually do it. But I always show the global financial crisis. You had the first wave, then you had the second wave, which this is where BlackRock and all that decided that they liked real estate.
Yep.
And so we really didn't hit the market in enough numbers to change the pricing trajectories. But we should always start with this. for perspective, because you got a little ramp up here from the bottom of the when they shut the courthouses down during the pandemic, but it's not anywhere near like, that. And then particularly if you look, I mean, since basically 13 forward, we haven't broke 300.
Yeah, in a month. And again, for the size, so even if you go back in 2007, 2006, 2008 timeframe, the volume of amount of properties that could be foreclosed on have gone up drastically. So if we're still staying below 300 for that many years, there's not some big foreclosure, at least
Wow,
current.
interesting modality from basically here forward to about here, 70% of the sales were cash.
Yep.
And then as you keep rolling forward, it's still in the high 30s.
Yep. Yep.
So it's definitely a different market than it was what created the GFC, which as you said it, we all lived through it. We all know what we should have done. Would love another shot at it, but usually the world doesn't just rarely is that pitch just right there in the strike zone floating for you. It's
And calling your name out. Yeah.
it's always a curveball every time. So
Yep. Yep. Now, again, I have a positive outlook from the standpoint of, which we'll see more charts to probably discuss this, but I don't think we'll see some crazy, amazing increase in values. I think we'll see a steady, okay, grinding growth. It's going to take a while, but we're going to be okay. I don't think it's doom and gloom at all. But that's my
now
two cents.
here's since 15 gives you
Yep.
some good perspective.
Yeah.
I mean, we haven't broke 160 since 15. I still keep saying the number that I really would start paying attention and alter what I'm doing is 400.
Yep.
So, which
Again,
ain't there
400
yet.
foreclosures.
We're not probably going to hit it this month. And this is since 2020. And this is why everybody has so much fun with the foreclosure numbers because they go back to these months where the courthouse was basically shut down.
Yeah.
And there it is. You know what I
Yep.
mean? So it's interesting to see, but it's cherry pick numbers, and if they're not using whatever numbers you're looking at, if the trend line doesn't encompass pre-pandemic, you're just it's usually clickbaity headlines. I mean, there's people making a lot of money. Me and two other guys run a Miami Dolphins fan page, and we're actually making money because everybody's so mad that the Dolphins are so bad. So, I mean, we're making memes and putting them out there. We had one meme of John Gruden as the Dolphins coach that literally paid us $100. That post of people arguing. I was like, this. And now imagine putting politics in it. You could really
Oh
make
man.
money, or I was laughing the Nick Jarrell guy. 2026 went out yesterday. That's the crash.
Yeah, that's it.
2026 will be 2027.
No, that'd be good, man. That'd be good. You
And
should
the
do
same guy, it's funny, his data, some of his data is not bad if you get past the clickbait stuff that he has to say to get people to watch so he can make money. But some of his data is not bad. But then again, if you get on his app claims the most undervalued zip code in Lee County is Fort Myers Beach. Kind of have a hard time with that.
Yeah, don't agree with that at all. I don't show me the data.
Yeah, I mean, what, on a 20-year timeline? Okay, yeah, I agree with that. Everything's undervalued on a 20-year timeline.
Yep, yep.
So, but
You,
that
you,
is
you need to get
since
a shirt that says "Show me the data." You have that, right?
yeah,
Okay,
I should have wore it today.
that would have been
This is
solid.
a fun chart I've been doing. This is overlaying the GFC over today. So, but ironically, we were already trending down from the big foreclosure cry, from there to today. So anybody that's actually trying to overlay this to that, it just doesn't work.
Nope, doesn't make any sense. Yep.
So one thing I wanted to talk about, a rising tide lifts all boats. The money supply is really what's doing this. They're printing money. The dollar becomes less valuable. Hard assets are functioning in it. And I've been saying this at meetings for a while now. Your house isn't worth any more than it was in 1970 in real buying power. It's just the dollar's worth so much less. With that said, you really have to have hard assets or your dollars are just getting ground down by the day.
True. But the thing too is that point. I mean, when I was a kid, I remember thinking, I'm going to be a millionaire someday. That'll be my goal.
Millionaire's not that much money.
No, it's not at all. I mean, you need to be multi to be in a spot where, I'm thinking, if you just get to $1 million, and again, how do I say this without sounding like a like a jerk about it? That ain't much. If for a retirement or something, that's really you need a lot more than that. So
All my favorites are the real estate agents. I'm $1 million producer, bro. That's 30,000 a year gross. The 7-Eleven clerk makes more than that.
yep, yep,
So,
yep. Just perspective. I mean, so the value of the dollar, yeah, that's an important slide for people to understand because it's just reality.
yeah.
So
So let's talk about pricing from '01 forward. This is interesting one. This is average pricing too, all property types from the MLS.
mhm.
The linear trend line's interesting, but I kind of consider the January 1 to the January of '08 to be, I mean, you look at the money supply, the growth after that is pretty wow.
Mhm.
But the interesting thing is from like 2010 to about 2019, we had a linear normal market for
Yep.
9 years. That's never probably happened here before because the coastal Sunbelt areas are boom bust. It always has been. And,
Yep.
there's the cyclical and the secular. And the secular is a lot of demographics, and boomers and boomer birth. Ironically, in a few years, it becomes the Gen X birth rate chart for the new 62-year-old retirees, which I'm going to probably need some therapy when I have to say that. But it is what it is. But
Yep. Yep.
you've got just an interesting market, and this kind of shows the GFC cycle aftermath. Really, investors' heyday here. You could buy properties and they actually cash flowed. And then
Right.
once this took off, kind of for us, the cash flow side's gone. It was more of a speculative deal.
Correct.
Now you've got the kind of return to normalcy correction. We're in a correction. I mean,
Yep.
from here to here is most definitely a correction.
Yep. 100%. Yep. I wish
So
more people would say that out loud on news.
I mean, the sooner you say it, the better. It's kind of like when you were in trouble, it's better off just tell dad, yes, I broke the tool.
Yep. Yep. Yeah, it was me.
The more he digs for it, the worse it's getting. You know what I mean? Just go ahead and, yeah, I broke the tool. I'm sorry. Get it over with. So,
Those cookies that are missing, that was me.
yeah, I did that. So that way mom can just move on. Here's from '08 forward. This is a bottoming market going forward. The linear trend line moves a little differently in this.
Yep.
So, and the fun one, this is sales counts and pricing, and this really tells you what's going on where.
Yep.
Generally, when they bump, it means divergence to either upside or downside.
Yep.
Divergence to the up. I mean, these two haven't bumped yet, so we've still got some work to do.
Hmm.
But if you look at particular, and sales counts matter more than pricing. Pricing is really a lagging indicator of the market.
Yep.
The sales counts to me matter more in what I'm tracking for trajectories. But if you look at, it's getting pretty linear there. It's the sales counts are right now we've got some positive year-over-year sales counts, which we'll talk about, but I put it in here that either neutral or positive year-over-year sales counts was 5 of the 9 months this year.
Wow.
So the market's fluttering, but it's not. I always say I want to see 3 months in a row to have a trend. Closing thoughts. There was 240 raw list pendants filings, of which 136 were mortgage related. The rest were construction liens and HOA liens. There's some enforcement actions for people trying to make people close. I mean, I've filed some of them.
Yeah, but
But
I'll say this too: that information and data is important because that skews the numbers a little bit.
yeah. Well, but there's a lot of construction related stuff. All the basic builders. You see a lot of Delta in there, and ironically, a lot of the builders that you see in the media, they're still enforcing contracts, even though there's a big hue and cry against them in the media. So there's all kinds of interesting stuff going on there.
Yep.
Uh, for context, not clickbait. I mean, again, look at the foreclosure of then versus now. I already talked about the sales counts have been positive of neutral for 5 months of this year. Now, here's the interesting thing. All the clickbait headlines and all the Twitter and TikTok influencers, the doom ones, claim that the FHA moratoriums, that there's this huge glut of FHA foreclosures that have which the delinquency are just normal, but they're using the 30 days down as compared to the 90 days down. and there's always 10 to 13% of the FHA loans are 30 days down. It's about 1% when you hit 90. That's when you're getting accelerated, you're going in foreclosure. But supposedly all this ended, according to all of the housing experts on Twitter, who, I mean, they're all making a living off Elon bucks, which is probably easier than you and I getting up and doing real estate every day.
It's true.
So think of it,
But I'll say this too, though. Again, I don't. We'll see if they're right or not. But I have someone close to me in my family that spouse lost a job and they were struggling for a little while, got reemployed, but got behind, and they communicated with the bank, and their bank was incredible. Like worked with them, put payments more towards the rear. Like they adjusted their loan because they were transparent and approach it that way. So I'm sure they learned from back in the day. If you work with people, your sheets are going to look a lot better. Your balance sheets are going to look a lot better if you make some adjustments instead of being aggressive on kicking people out. So if other banks are getting smart and doing that, that'll also have an impact on not as many foreclosures in the event we have an issue with foreclosures. So that's huge.
yeah.
So
Now
that's
we're going to look at one more thing. The September numbers, which are to me very interesting. Well, to everybody, they should be. All right. That's a lot more green than we've been used to lately, for sure.
yep.
And this is part of the spreadsheet that I use for me to keep me grounded. And sales counts are up, volumes up, the average price is up, which honestly the stock market's doing so well that the upper end of the market's doing fine. Crypto's ripping, everything's ripping. You can argue whether it's more than likely a melt up or whatever you want to call it, but the median, the lower end of the market's kind of down still. And you look at it, the median price is down slightly, but the average home size is up 4%. The interesting number is last year, whole MLS was 213 a square foot. It's 199 today. So you got people on the lower end are getting a bigger house at a slightly lower price than they were last year.
Right.
We're down 15, 16% from the peak though. So if you waited, you're doing fine. And then on top of that, rents are, getting cheaper. So
Yes, they are. Yep.
unless you're a build to rent guy who's selling, and then rents have never been higher.
Yeah, if you build to rent, you are getting double what the market actually shows on Zillow.
Yeah, 100% double.
Sarcasm strong with that last statement, but
No, we're being sarcastic.
that's
Yeah,
right.
when you look at the property types, what's interesting is basically it's condos and manufactured homes are right now what's hugely driving negative price pressure.
Yep.
And then the
Yep.
CDOM is down Alva, Bonita, Miramar, and Sanibel,
Yeah.
which at the upper end of the market, the stock market helps heavily. I mean, people feel good. Hey, we just sold 10,000 shares of this. Let's, maybe it's time to look at a house somewhere. So there's a lot of interest. Now, 1 month doesn't make a trend. I actually did a year to date, and it was down kind of. Let me see if I can find that. Now, I'm not going to pull that up because I haven't cleared it for typos, but the year to date's down, still down all the way
Yeah.
across the board. But,
Yep.
and then you look at the cash sales percentage, 34 to 36. So the cash sales percentage is going up. So it's cash that's driving this.
Yep.
Starting to see a lot of, not a lot, but I'm starting to see wealthy Gen Xers retiring here. So that's an interesting thing. You've got people buying their retirement home in their 50s, which is the early retirees tend to be the wealthiest.
Yep.
And then, as they fade on to by 65, they're buying what they can buy. It just, depends on habits and investment choices and really even the macro cycle. Because like right now, the Northeast is rocking.
Yeah.
Those
But
areas are
I'll
doing.
just say this too, though. I mean, the huge advantage that we have here that I think we'll always have is January, February, March up north they're shoveling snow, and we have cool days compared to what they're dealing with up there. And people love that. A lot of people don't want to live. I mean, every time I talk to someone who relocated from up north to live here in the retirement, average age, they're like, I'm done with being in the snow and being cold and being, miserable winters, and I want to get out of that crap. So I think that always had an impact to drive people to Florida. There's many advantages, but I think that's a huge. When you're done having to go to work and you go to the grind and you want to be able to relax and enjoy yourself, you don't want to shovel snow. So, but that, I mean, even having two homes, I mean, having the summer home up there and coming down here for a second home, a lot of people do that, and I get it.
Like my brother-in-law was always pretty anti-Florida. Never really liked Florida. And we're on my boat staring at the fish houses, slaying the fish. And he was on the front of the boat because you ever have that guy you take fishing that the closer you get to the fishing spot, the closer he is to the best fishing spot on the boat.
Yeah.
So
My approach is go up front. I'll still catch more, but go ahead.
yeah, I remember he looked at me and said, "I'm moving here," and I was kind of blew me away because he'd always been fairly anti-Florida. It was too hot. It was too this. It was too that. But
Sure.
one solid. I mean, we slayed the fish that day, just kind of doing a drift from when you're coming from the south at the fish houses. There's that PVC pipe that sticks up that if you go on, that to
Yep.
mark the oyster bar. We
Oh, there's tons of oyster bars there. Yeah. Yeah.
and float towards Pineland Marina through that like 2, 3 feet of water.
Oh
And
yeah.
just, I mean, slayed it. It was one of the best days fishing I ever had.
Oh yeah.
And that's his running joke is that my boat actually cost him a lot more than it cost me. It cost me X thousands of dollars. My boat cost him hundreds of thousands of dollars.
Trying to come down. Well, it's funny. On a total side note, now we're going on kind of a fishing tangent why people come down here, but I was just in that area a couple weeks ago and with my brother-in-law fishing, and I said, "Hey, be careful. What we're about to catch, trout, ladyfish, and stuff. They throw a lure all the time, and they can go in your hand, and just be careful." Less than 5 minutes later, I'm taking a fish off and throws the lure, sticks on my finger and past the barb. I'm like, you've got to be kidding me. I was just like, are you serious? So me being the idiot that I am, I got out the rusty knife that was very dull and I cut it out, about an hour later and went back to fishing. But it was miserable, man. It was not fun. I'm like, this is miserable. But I'm not going back. I'm not going back to the shore. We're fishing, man. We're out here fishing. So I cut it out and kept going, man.
Yeah. You should
It
have
is what
filmed
it
it. That would have been
is.
great for the YouTube channel.
Yeah, like, hey guys, we might know some real estate. We also know how to get a knife out with rust.
We're also really stupid outside of real estate. So,
Well, it's like, there's rust on that knife. I'm like, it's all I got, man. Sorry. What are you gonna do? We ain't leaving to go home. So pretty
that's
funny.
where I'm lucky. One of my best friends is a veterinarian, and he's dug more fish hooks out of me and my boys than.
Yeah. Oh yeah. Oh yeah. Man, that's not a fun experience, man. I was like, oh man. Nothing like cutting yourself with a dull knife. That's
Well, you just had a really big closing. Anything you want to share on it? You and group of investors took down a pretty good sized portfolio.
Yeah, ended up being 95 resident or 95 combination of single family homes and mobile homes, mostly mobile homes. And then 12 lots, vacant lots, an office building with a big storage area in the back. Yeah, it was several million dollars and took about 5 months.
Office building in Page Field.
No, 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 out in Northern Myers. But it was awesome, but it took a lot. I mean, it took a lot of how do I say this? There's a lot of moving parts in that many individual properties. If you buy an apartment building and they're all 95 next to each other, that's pretty straightforward. You got to do a lot of due diligence, but 95 separate individual properties along with 12 other lots and then an office building. I mean, there's a lot of moving parts. So, I mean, it was exciting to get it done, and it closed September 30th. And I mean, it's been chaos ever since we closed because all the notifying tenants and getting utility stuff squared away, and I mean, there's health department stuff. I mean, there's a lot going on, but it was awesome. It was an awesome deal, and I think we bought it well. We paid about 59,000 a piece per property,
Yeah,
and
that's pretty solid.
those numbers. I mean, you can cash flow all day long on that. Just a matter of holding out and see what the market does and selling at the right time to get a good chunk of change after the fact, hopefully. So, but I mean, it worked out really well. I couldn't be happier with it. So,
One thing I kind of wanted to end this on, something that hit me the other day.
Sure.
Uh, like deal like that, you would never get a REIT to buy that. It's too
Nope.
management intensive. It's too much brain damage.
Correct.
So the biggest edge we as small investors have over institutional players is that flexibility.
Yeah. Oh yeah.
BlackRock is never going to buy that. Would if that was either a big apartment building or 90 new scattered single houses in Cape Coral, yeah, they'd buy that.
Yeah. Yep.
Ironically, the stuff they buy doesn't cash flow, but if I borrowed money at what they borrowed at, I'd probably buy dumb stuff too.
Yeah.
So,
That was quite honestly, I mean, for what it's worth, that was part of my pitch to the seller was you're not going to get a conventional person to come in here. You have the option of cash, and that's it. No one's going to do any kind of financing. No bank's going to touch this. And that's after several conversations with banks to see if that was even an option. No one would touch it. That many parcels, not on the same, located all throughout, a huge area. There was no conventional financing. So your option was cash. And very few people are going after that asset class. You're right. These bigger institutions are not going to buy it. So that was my sales pitch. I'm like, y'all, good luck. Or this is what I'm willing to pay. I don't think you have another option, or very few options. So I'll close if I say I'll close. So let's do this. And that's what happened. I mean, that's how it happened. But and we would have closed sooner had there not been so many title issues. But I mean, that's just part of real estate. There's title problems you got to fix. So not
well,
over.
you said you guys retired all the mobile home titles when you bought it.
So part of that, or the contingency was, there was money put aside to handle that part because we're not all the way through it. We're basically through the hard part of it, and there's still some last minute stuff we have to do. So as long as they're willing to sign documentation and make themselves available as needed, if we needed them for anything, and they said absolutely. So
Just
I have
think
no
about
concern.
if you owned 100 mobile homes, just that putting that little stupid sticker on every year.
Oh yeah, well yeah. We're gonna get rid of all that where there's no problem at all. But what I did, I researched because the end goal is to sell these when the time's right. But I want to make it as easy as possible to get conventional financing to sell them. Now, mobile homes are not as easy to conventionally finance, or at least less people are financing them. So I spoke with multiple mortgage brokers on and title companies about what needs to be done so that a conventional banker would be willing to loan. And again, long story short, maybe another video at some point we can go in more detail on it. I did all I needed to up front to avoid there being a problem in the future, even if it's 3 years from now, to sell them. So I have every option available from a conventional financing standpoint to have our ducks in a row. So that's what I did. I hope it works. I feel very confident that we'll make a lot of money when the time comes. So
Cool.
pretty good. Yeah, pretty good deal. So
Well, congratulations on that. And we actually all know the seller too. Congratulations to him as well.
yeah, absolutely. Yeah, it was great for everyone involved, in my opinion. It was awesome. And again, it's management intensive though. If you don't have that set up already, that's a lot of brain damage. But
You better hire a few folks.
yeah, yeah. No, yeah, I've been tied up, been working late hours these last couple of weeks just to get everything squared away. But that's part of it. We've talked a lot in RIA about you want to make money in this business, you got to work your tail off. Sometimes you're working until 9, 10 o'clock at night, and you have to be okay with that. So, but if you are, it pays off in the long
It's
run.
not even being okay with it if it's not if the outcome doesn't get you passionate about getting after it, then you need to find something else another outcome to chase.
So true. Yeah, you have to be self-motivated and disciplined and want it for this to work. Otherwise, it'd be miserable. Because a lot of this, you got to be patient. Real estate people, if I could teach anyone about real estate, you have to be patient. At the same time, aggressive. So that's a really weird balance you have to have. So, but it was good. Good times. I'll report on that later as I have some updates.
No,
So,
you're gonna have some fun days with those. I
already have. Yeah.
Well.
Yeah. Oh yeah.
2 miles that way, so I know the area well.
I walked up there yesterday to a group of properties, and as I walked up, a person walked up and said, "You Mike Lyons?" I'm like, "That depends." I'm like, "You mad?" Yeah, so you mad? And no, I'm not. Yeah, I don't like him either. So
Now, do you have the lots? I'm assuming you're going to put mobiles on those.
Yep. Put mobiles on those, and
I don't know though. You're going to be blown away at what them lots trade for.
That's actually, you and I will get offline at some point and talk about that, because I'm not going to do anything, immediately on that. But I do think that the amount of money that could be made with a mobile home, with all the costs associated with it, with reselling it, versus what the lot would cash out for right now, is what I'm going to evaluate. So
Yeah.
But,
I wish we had the guy that sells us trailers in Georgia here.
Yeah, that would be helpful. And I've looked into that. I mean, you're paying about double here for the travel and for everything else. So you set a mobile home, that there's a travel that's very expensive from wherever it's coming from to the location, then setting it up, then hooking up utilities. If there's no well or septic, you got to put that in. Like there's some costs there that you probably wouldn't think about initially. So I've evaluated that enough to where I'm thinking it might make most sense to do that long term, but we'll see. So
cool. Enjoyed it, Mike.
Yeah, thanks, man. Appreciate it.
This concludes this edition of RIAcast. Be sure to subscribe to receive our next episode. You can also subscribe at our website, www.swflreia.com. See you at a meeting soon. Please let us know if you have a suggestion for a future episode.